From a humble garage in 1976 to a multi-trillion-dollar empire, Apple's journey is one of the most incredible stories in business history. But how did its stock, ticker symbol AAPL, become one of the most sought-after investments in the world? Let's dive into the fascinating story of Apple stock. Our story begins in 1976 in a garage in Los Altos, California. Three visionaries, Steve Jobs, Steve Wozniak, and Ronald Wayne, founded Apple Computer. Wozniak was the engineering genius, Jobs was the marketing mastermind, and Wayne drew the first Apple logo and wrote the partnership agreement. But just 12 days later, fearing the financial risks, Ronald Wayne sold his 10% stake in the company for a mere $800, a stake that would be worth hundreds of billions today. This early decision serves as a legendary cautionary tale in the world of investing. For the next 4 years, Apple grew rapidly, fueled by the success of the Apple II, one of the first commercially successful personal computers. The buzz was building and Wall Street was taking notice. The stage was set for a monumental event. On December 12, 1980, Apple went public. The initial public offering, or IPO, was a sensation. They offered 4.6 million shares at $22 per share. The demand was so intense that the stock jumped nearly 32% on its first day of trading, closing at $29. This instantly created over 300 millionaires, a record at the time. Apple's market capitalization soared to $1.778 billion, more than the Ford Motor Company. The IPO wasn't just a financial success, it was a cultural moment, signaling the dawn of the personal computing revolution and cementing Apple's place as a major player. For early investors, this was the beginning of an unbelievable ride. After the explosive IPO, the 1980s were a mixed bag for Apple. The launch of the Macintosh in 1984, with its groundbreaking graphical user interface and that iconic Super Bowl commercial, was a technological triumph. However, internal power struggles led to a dramatic turn of events. In 1985, following a dispute with the board and then CEO John Sculley, Steve Jobs was forced out of the very company he co-founded. The post-Jobs era was a challenging one. Throughout the late 80s and into the 90s, Apple struggled to innovate. A confusing product line, fierce competition from Microsoft's Windows operating system, and a series of strategic missteps saw the company's market share and stock price plummet. By 1997, Apple was bleeding cash and rumored to be just 90 days away from bankruptcy. The stock was trading for less than $1, split-adjusted. The dream seemed to be over. It was a dark time, and many believed Apple was destined to become a footnote in tech history. But then, the comeback of all comebacks. In a move that shocked the tech world, Apple bought Next, the company Steve Jobs had founded after leaving. And with that acquisition, Jobs returned to Apple, initially as an advisor and later as interim CEO, eventually dropping the interim title. His return marked a pivotal turning point. Jobs immediately began to streamline the company. He cut unprofitable projects, simplified the product line down to just 4 core products, and forged a surprising partnership with rival Microsoft, which invested $150 million in Apple. This injected much-needed cash and restored a sliver of confidence in the beleaguered company. But the real magic was yet to come. Jobs' vision was clear: to create insanely great products that combined powerful technology with elegant design. The first major hit of the new era was the iMac in 1998. Its colorful, all-in-one design was a radical departure from the beige boxes of the time. It was a statement. Apple was back, and it was different. But the product that truly changed everything, for Apple and for the world, was the iPod, launched in 2001. 1,000 songs in your pocket. It was a simple, powerful idea that, combined with the iTunes Store, revolutionized the music industry and set Apple on a new path. The iPod's success was just the beginning of a golden decade. The stock, which had been languishing, began a historic climb. Then came 2007. Steve Jobs took the stage and introduced a device that would redefine the 21st century, the iPhone. It was an iPod, a phone, and an internet communicator all in one. The iPhone was not just a product, It was a platform that created a new economy of apps and services. Its launch sent AAPL stock into overdrive. Just a few years later, in 2010, Apple did it again with the iPad, creating an entirely new category of device and further solidifying its ecosystem. During this period, from the iPod to the iPad, Apple's revenue and profits skyrocketed, and its stock price followed suit, turning it into one of the most valuable companies in the world. For investors who held on through the dark times, the rewards were astronomical. Now let's talk numbers, because they are staggering. To make sense of Apple's stock price over time, we need to understand stock splits. Apple has split its stock 6 times. The first was in 1987, a 2-for-1 split. This was followed by 2-for-1 splits in 2000 and 2005. Then came a massive 7-for-1 split in 2014, and most recently, a 4-for-1 split in 2020. What does this mean? If you had bought just one share at the IPO price of $22 and held on, that single share would have multiplied into 224 shares today. The initial $22 investment would now be worth tens of thousands of dollars. Beyond stock appreciation, Apple also began rewarding shareholders with dividends. After a pause in the late 90s, the company reinstated its dividend program in 2012 under new leadership. Since then, Apple has become one of the world's largest dividend payers, consistently increasing its payout year after year, providing a steady stream of income for its investors. In August 2011, the world mourned as Steve Jobs stepped down as CEO due to health reasons, passing the torch to Tim Cook. Jobs passed away just a few months later. Many wondered if Apple could continue its incredible run without its iconic visionary. Tim Cook, an operational genius, proved the doubters wrong. Under his leadership, Apple has not just sustained its growth, it has reached unimaginable heights. Cook expanded the iPhone line, introduced new hit products like the Apple Watch and AirPods, and masterfully grew Apple's high-margin services division, which includes the App Store, Apple Music, iCloud, and Apple Pay. This strategic shift has diversified Apple's revenue streams, making it less dependent on iPhone sales. Under Cook, Apple achieved historic milestones. In August 2018, it became the first publicly traded U.S. company to be valued at $1 trillion. Just 2 years later, in August 2020, it crossed the $2 trillion mark. And in early 2022, it briefly touched a valuation of $3 trillion. The numbers are simply mind-boggling, a testament to Cook's steady hand and strategic foresight. He transformed Apple from a beloved product company into a global economic powerhouse. So, what does the future hold for Apple and its stock? The company is at a fascinating crossroads. On one hand, it faces immense challenges. There's increased regulatory scrutiny around the world, particularly concerning its App Store practices. Intense competition in the smartphone market from rivals like Samsung and emerging Chinese brands is a constant pressure. And there's always the question of, what's next? Can Apple deliver another product as revolutionary as the iPhone? On the other hand, the opportunities are enormous. Apple is making a huge push into new frontiers. The recent launch of the Vision Pro headset signals its bold entry into spatial computing and the metaverse. The company is investing billions in artificial intelligence, integrating AI features across its entire ecosystem of hardware and software. There are also persistent rumors about Apple's ambitions in the automotive space. Its enormous cash reserves, fiercely loyal customer base, and powerful brand give it a unique advantage to tackle these new markets. For investors, the question is whether Apple can continue to innovate and grow at the pace it has in the past. The company's future success will likely depend on its ability to leverage its ecosystem, lead in new technologies like AI, and successfully navigate a complex global landscape. From a garage startup that nearly went bankrupt to the first company to reach a $3 trillion market cap, the story of Apple stock is a lesson in vision, resilience, innovation, and the power of a brand that inspires deep loyalty. It's a journey that has transformed technology, culture, and the very nature of investing itself, and it seems this story is far from over. Thanks for watching. If you enjoyed this deep dive into the story of Apple stock, don't forget to hit that like button, Subscribe to the channel and ring the bell so you don't miss our next video. We'll see you in the next one.